Hi guys, welcome back to another video. I'm going to try and make this video a very quick and a short one. The reason I'm making this video is I usually get people asking me how to choose forex pairs to trade. So I'm just going to give you an idea of how you can go about it and how I go about it. By the way, if you have another way of how you choose or identify the forex pairs to trade, leave your comments in the comment section below so that you can also help somebody else who might be struggling. So let's get into the video. Again, not trying to make this video any longer than it should be. So the first thing that you probably need to understand is forex basics. In terms of forex trading, most brokers, they probably will have more than 50, more than 28, more than 30 forex pairs that you can trade, but it doesn't mean that you need to trade all of those pairs. I've seen many people who are trading and sometimes they are not winning. They are really struggling with their trading. And the quickest way to struggle with your trading is to trade each and everything that is offered by your broker. If you disagree, again, feel free to leave a comment in the comment section below. Why am I saying this? Is I've most of the time seen that the people who usually do best in trading, including myself, is people who are focusing on maybe one or two or maybe three forex pairs. This could be including a metal, maybe gold or silver or something like that. But I've seen that many people who focus on only one or two or three forex pairs, including metals or indices, most of those people are successful or see more success in trading than people who are trading 20 pairs. It's again my opinion. Feel free to disagree in the comment section below. So what you need to understand is there are major pairs in forex trading. For example, they might involve the US dollar, like one of my favorites, which is Euro USD, as well as USD JPY, AUD USD, GBP USD. We call those the major pairs. Then there are minor pairs that do not mostly involve the US dollar, like Euro GBP, AUD JPY, NZD JPY, and all those other pairs. We call those minor pairs. Most people that I've seen making money in trading, they actually stick with major pairs. There are some advantages. I do not make this video any longer than it should be. Probably I will do another video of why you probably should stick with major pairs or why you probably should trade minor pairs. But the third category is what we call exotic pairs. If you don't know what you are doing, if you don't want headaches in your life, trust me, you probably want to stay away from these exotic pairs. Exotic pairs are usually like USD versus Singapore dollar, US dollar versus Russian ruble, versus Chinese yuan or renminbi or whatever you call it, or the rand versus South African rand versus some funny currency out there. You probably don't want to be trading those unless you really should. Yes, I'm not saying you cannot make money with those, but usually what gets me off of those things is the spread is very wide, and for you to actually make money with those, you need to actually do swing trading and position trading, of which most of us, we don't have that patience to actually sit with a trade for a whole month. So those are the exotic pairs. If you really don't want headaches in your life, I mean, just stay away from the exotic pairs. You can make money with them, but if you are somebody who is into scalping, day trading, and intraday trading and stuff like that, exotic pairs waste of your time unless you are trading fundamentals, because those things can stay in a range for a long time. They don't move. That's the thing with exotic pairs. So that's something you need to understand when you are choosing a forex pairs. Understand the forex pairs to trade. I mentioned major pairs. They are very good if you, especially if you are into scalping, intraday trading, day trading, swing trading, even position trading. Minor pairs, they are still good. Exotic pairs, you can make money with them, but there are a lot of trouble. I mean, if you want to trade them, it's fine. Then, what you also need to understand when you are choosing your forex pairs is fundamental analysis. Um, for example, if you wake up on a day and you're a person who doesn't like to trade news, you need to pay attention to fundamental analysis. So the first thing that you do, which is what I encourage anybody to do, by the way, is to first of all, before you go into the markets, have an understanding of what news are coming out for that day. Economic data, maybe GDP, inflation rates, unemployment figures, central bank interest rates, and things like that. Then you can decide which pairs are not affected by those news, or which pairs are affected by those news, because there are people who lose a lot of money with fundamental trading, and there are people who make a lot of money with fundamental news trading. So those are some of the things that you probably also need to consider when you are choosing your forex pairs, especially to trade for the day. So if you're going to be trading for the day, understand any geopolitical events that are happening. Probably there's an election somewhere. As I talk to you this video right now, there is an election coming up in South Africa. So you probably are going to be watching the South African rand, or staying away from it if you're not very good with fundamental trading. Of course, there are also news like central bank policies that are announced by these major banks like Federal Reserve, European Central Bank, Bank of Japan, and all those major banks. So it also helps you to decide on which pairs you are going to be trading, especially for the day, for the week, or which pairs that you need to avoid if you are not good with trading fundamental news. Third point, technical analysis. I've seen that there are some forex pairs. That's why I said at the beginning, you probably don't want to trade each and every forex pair that is offered by your broker. I've seen that in terms of fundamental technical analysis. In terms of technical analysis, you find that there are some pairs that will give you your nice chart patterns, your head and shoulders, your double tops, your bottoms, your flags, your pennants. Then there are pairs where you really, if you are a person who wants to trade chart patterns, you really struggle to find the chart patterns to trade. So analysis, technical analysis, indicators. I'm big on supply and demand, support and resistance, or whatever you call it, trend lines and stuff like that, and channels. There are pairs that I know they don't really work well with those indicators or chart patterns and support and resistance levels. So I've taken those pairs off my charts. I don't need them. I don't trade those. I trade pairs that I know certainly they usually come to my support and resistance levels, and they respect them, they break them with some confirmation. If they're going to break them, they give me some confirmation first, then they break through those levels. They can also be traded with RSI, MACD, Bollinger Bands, and things like that. So in terms of technical analysis, you're also looking at, does this pair conform with technical analysis? Can I analyze this pair with technical tools? If you can't analyze that pair with technical tools, then chuck it off and find another pair that conforms to technical analysis. Then there are also things like market sentiment. gold has been pushing a lot recently, so you might be trading gold because the market sentiment has been bullish on gold, so that can help you to also choose what to choose. Gold, Nasdaq has been pushing, breaking new highs lately, so you might actually choose to trade the NAS 100. Why? Because of market sentiment. So you can also use that to what? To also trade, to choose the pairs that you're going to be trading. I apologize if you hear some horns outside. They are the refuse collection guys that have just driven up, and that's driven up when I'm making a video. But just in case you hear some honking in the background and you're like, what's going on there? There's a refuse collection truck that just pulled up just now. Okay, then you also want to decide on correlation and volatility. What do I mean? Understand how currency pairs move in relation to each other. For instance, Euro USD and USD CHF, they are often negatively correlated. They move opposite directions. Euro USD and USD CHF. Usually, the dollar index and gold are negatively correlated. They are supposed to be moving opposite each other, but sometimes gold, you find that gold is actually moving same direction with the dollar index. I think I mentioned it in a previous video. So you need to understand how currencies move in relation to each other. So if you're going to, for example, the example that I've just gave that I just given you, Euro USD is negatively correlated with USD CHF. Now you find somebody is buying Euro USD and at the same time they are buying USD CHF. It doesn't make sense, because you should be buying one and selling the other. So you need to decide on, based on correlations, current correlations, the pairs that you are going to be trading. Volatility. You can use the average true range indicator, ATR indicator, to measure the volatility of current pairs. For example, I already said I love to trade Euro USD, and I also love to trade gold and silver. Silver less than gold, because silver is a smaller market. It pays a lot, but it doesn't move as much as gold. So you want to look for pairs that move. Like I said, exotic pairs, sometimes those things, they don't move. If you're going to trade exotic pairs, know that sometimes those things will be stuck at a level and they don't move. Now, if you are going to be making money in trading, you want to get as much opportunities as you can, which means you need to only find volatile pairs with enough movement per day, like your Euro USD, GBP USD, USD JPY, AUD USD. Those pairs, they actually can move, unlike the other pairs where you can enter a trade and sometimes you are stuck in that position for a very long time. There's no movement because there's no volatility with that pair. That's another thing that you can use to choose your forex pairs to trade. Then you also need to choose your trading strategies. Every strategy works well with a certain pair, with a certain amount of liquidity, a certain amount of volatility, momentum, trends, and stuff like that. So whatever strategy that you're going to be trading, whether it suits for day trading, swing trading, position trading, you find that there are some pairs that do well with that trading strategy, and there are some pairs that it's really a waste of time with that strategy. That pair just doesn't conform to that trading strategy. So you need to choose your pairs also based on the strategy that you are going to be using when trading, and also your trading style. Are you a scalper? Are you a day trader, intraday trader? Are you a swing trader? Are you a position trader? So that also helps you to choose the particular pairs that what you can actually use to trade. I did not plan to make this video very long, so if you find some value in the video, leave your comments in the comment section below. If I left out something, leave it in the comment section below. By the way, the broker that I use, see the links in the description box below. You can start trading. You have seen me, I've talked about it in my previous videos. I hate demo trading. My broker allows you to deposit just $5 or $10 in your trading account, and you get access to practicing in the real market conditions. Demo trading, I don't like it because many people, they get stuck in demo trading and they never have a feel of the real markets. They don't know how to react when they actually start losing real money because they never had that training. They were just using demo trading. They don't know how to react when they start making real money in the markets because they don't have that training, because they were using what? Fake demo trading.